Imagine waking up tomorrow and discovering that your bank account has quietly lost a significant portion of its value. Not because of inflation, not because of a stock market crash, but because the very institutions meant to protect your money, the central banks, have quietly begun panic selling. This is not a theory. This is happening right now. Welcome to Macro Rewind, where we unravel the hidden moves that could affect your wealth in ways mainstream news refuses to cover. If you want to understand the full, hit that like button and subscribe, because what you're about to hear could change the way you think about your savings forever. Central banks from Washington to London, Tokyo to Frankfurt, are sitting on mountains of assets, trillions of dollars in government bonds, mortgage-backed securities, and other financial instruments. These are supposed to be the safe, stabilizing pillars of the global economy. But over the last few months, insider reports reveal that these pillars are cracking. Massive, sudden sell-offs have begun, often under the radar. Using complex financial channels designed to disguise their scale, you might be asking yourself, why would they do this quietly? The answer is chilling. Revealing the truth too early could spark a panic that even central banks can't control. The scale of these sell-offs is staggering. Analysts estimate that hundreds of billions, if not trillions, are being liquidated almost daily. But these aren't ordinary trades. They're defensive maneuvers, executed with the precision of a surgeon, yet the subtlety of a shadow. Today, we're witnessing a similar script, but on steroids. Central banks are facing a perfect storm: soaring inflation, political instability, and debt levels that dwarf anything in recent memory. And unlike 2008, the digital age has made these financial instruments more complex, more intertwined, and more vulnerable to cascading failures. The scary part? You may never see the warning signs in time. So why are central banks panic selling now? The simple answer is risk. The global economy is teetering on the edge of multiple crises at once. Rising interest rates are eroding the value of bonds they've held for decades. Geopolitical tensions are spiking, threatening supply chains and energy markets. And hidden beneath all this, currency pressures are mounting, with governments racing to protect their reserves. When viewed together, these forces create a ticking time bomb. Central banks, instead of openly preparing the public, are quietly moving their pieces, hoping the market absorbs the shock without spiraling into chaos. But here's the twist. While they sell, prices appear artificially stable, at least on the surface. Market algorithms, high-frequency trading, and shadow banking systems temporarily mask the turbulence. For now, it looks like business as usual. Yet beneath the surface, liquidity is draining. Bond prices wobbled with invisible tremors, and safe haven assets like gold and the US dollar fluctuate more violently than casual observers realize. If this trend continues, ordinary investors, even those who think they're diversified, could wake up to a reality where their assets have silently lost value. And it's not just numbers on a screen. History shows us that when central authorities lose confidence in their own balance sheets, public trust erodes fast. Bank runs, currency devaluations, and sudden market crashes become self-fulfilling prophecies. In countries like Argentina, Zimbabwe, and more recently Turkey, these scenarios unfolded in dramatic, devastating ways. While the US, Europe, and Japan have larger and more sophisticated systems, the principle remains the same. When central banks panic, ordinary citizens feel it first. Now, imagine this in real time. You check your retirement account, confident in decades of careful investing, only to see the balance dip sharply. Overnight, the numbers you trusted have shifted because central banks sold assets to manage risk they never publicly disclosed. Even your home value, linked indirectly to interest rates and bond yields, could fluctuate. Small decisions, like taking a personal loan or refinancing a mortgage, could suddenly carry far higher costs. And while policymakers hope these moves avoid headline panic, The ripple effects are unavoidable for anyone with money in the system. There's another layer most people overlook: coordination. Central banks do not operate in isolation. Federal Reserve, the European Central Bank, the Bank of Japan, and others often move in synchronized patterns. When one starts selling aggressively, others follow to prevent relative imbalances in currency and bond markets. This coordination amplifies the impact without ever being publicly acknowledged. It's the ultimate game of financial chess, and everyday investors are playing without even seeing the board. But here's where it gets personal. Your reaction matters. You don't have to be a Wall Street insider to protect yourself. Understanding these hidden dynamics allows you to hedge, diversify, and take steps before the system forces your hand. But ignorance can be costly. By the time mainstream news reports a financial collapse, panic will already be spreading. And at that point, even the safest accounts may feel the strain. Macro Rewind exists to illuminate these hidden layers, so viewers like you can make informed decisions in a world designed to obscure the truth. Some may dismiss this as fear-mongering, but the patterns are clear. Analysts monitoring central bank disclosures, shadow markets, and bond auctions note unusual sell volumes and tactical shifts. The messaging from officials is carefully crafted to calm the public, yet the behind-the-scenes movements tell a different story. Every digital footprint, every obscure market signal, hints at one conclusion. These shifts may take months or years to fully unfold, but early understanding gives you a critical edge. The implications are sobering. Central banks were created to stabilize economies, to act as guardians of trust and confidence. Yet today, they reveal human behavior under stress: fear, caution, and self-preservation. What happens when the guardians themselves are quietly panicking? That question alone should make every investor pause and reconsider what safe really means. Money is not just numbers on a screen. It represents your labor, your future, and your ability to weather uncertainty. And if the keepers of the financial system are selling in secret, no one is truly insulated. As we wrap up, think about the stakes. This isn't a hypothetical scenario. It's a story unfolding in real time, right now, behind closed doors, in the world's most powerful financial institutions. Your financial decisions, your investments, and your trust are all intertwined with the invisible actions of central banks. If you found this insight valuable, comment below and let us know your thoughts. Are central banks overreacting? Or are we staring at a systemic shakeup? Share this video with friends and family, because knowledge spreads faster than panic. And remember, in a world where even the safest institutions can panic, staying informed isn't just smart, it's essential. The clock is ticking, and the market is moving whether you notice it or not. Central banks may hope the public stays unaware, but history shows that hidden panic eventually finds its way into daylight. Protecting yourself begins with awareness, vigilance, and action. Don't wait for the numbers in your account to speak the truth. Watch closely, act wisely, and never underestimate the silent power of financial forces at work. Because when the guardians of money panic, your money isn't safe. It becomes part of a story that is only just beginning.